Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your end of the day agriculture update, and this is for Tuesday, and this is the 28th of February 2017, the last trading day of the month, and the markets have settled in the grains. Now, as we take a look at what went on, an up day in the grains, but you don't know the half of it. I'll give you an example. Last night I wrote my update, and I told my subscribers to my research, I said, you know, we're probably better off staying away for a day or so from the financial markets because President Trump speaks tonight at 8 p.m. Central Standard Time to a joint session of Congress where he's supposed to give us an idea of what his budget's going to look like. But the purpose of this speech is really to see, can he pull any Democrats over into his camp in a good guy sort of thing, and then deliver these particulars on the budget, his spending plans for the defense, and go on, tax cuts and the like. Well, all of a sudden this morning in the soybean oil, after 8:30, the market starts moving up dramatically. And it appears that there's a note. I saw it from all the news wires, so I'm not going to mention any one. I saw it on all of them that I watch, that the president was about to sign an executive order remandating how biofuels are going to work. And to make a long story short, they almost went limit up in soybean oil. That carries the soybeans at one point. It closed 20 cents off the high, up 13 cents, but it was still up nearly 35, 40 cents. The corn market got yanked up to 386. Wheat market exploded to the upside. All sold off as there became denials of all this taking place. Yet, when you talk to the Renewable Fuels Association, they claim they did get a call from the White House. I don't know what truth is, so it gets dangerous. But I'm just saying, you know, you try to stay out of harm's way sometimes. There's no way to do it. When we go to the soybean market, you can see that the recent down thrust on a weekly chart is still very much in play from 1080 down to a low of 1006, and we've recovered from that low on a settlement basis about, 19 cents roughly. When we go to a close-only chart, we've gone from 1071 3/4 this month of February, by the way, down to 1022, and we've recovered now about 13.5 cents, 13 3/4 cents off that. Take a look at today's action if you want to see craziness. Now, I'm going to show you something that was sort of a tip-off, and this was this day, yesterday. You had an outside day down. What is my rule on an outside day down? That if the high of an outside day down is taken out, it's labeled a bear trap. And those caught in here often pay a price as the market tries to go back to, at least my interpretation, is one of the key moving averages. Now, I have several of them, and if you haven't taken my course, why should I spill the beans? One of them is the 18-day average of closes, and we'll get to that in a minute. So the market takes this out today, and away you go to the upside. I'm looking in the office at it, and I'm going, wow, take a look at this. Now, what we thought was a swing line pointing down here, you remove that arrow and you put it back up here. You've got lower highs, lower lows. This is going to be a messy chart formation for days to come. But now I put the moving averages on, and again, the 18-day average at 1047 1/4, you exceeded it by 9 cents. And all of a sudden you're pulling back in. So you're caught again between the 18 and the 100-day moving average of closes. But the trend is down because you got lower highs, lower lows. What else? The bias is down because you're under the 18-day average of closes. The market held yesterday and the day before the lower Bollinger Band. All you did is rally back now to the 18-day average of closes in a market that is oversold. It is not tried to embed. It's just an oversold market. Do we understand that? As we take a look next at the soy meal chart, you're oversold. Let's get rid of today's action. Lower highs, lower lows. If you get a rally, I wouldn't be surprised if the 18-day average acts as the resistance number, but you're still in an oversold condition. That's all that I could say. The trend is down, the bias is down, but you're oversold. Soybean oil is the market that exploded to the upside, and by the end of the day, it still closed by one tick under the 18-day average of closes. Now, it lost the embedded reading. When you lose the embedded reading, one of the simplistic things to understand is the market often goes back to what I call that line in the sand, that 18-day average of closes, where the market decides what next. It's all that it did. It's done it all in one day. It did lose its trend. The market had been in a pattern, I'll show you this, lower highs, lower lows. So it's difficult to be short. I think a lot of the shorts are out of the market, and those not will probably, if the market does break back, just try to go to the sidelines and figure out what to do. Now, in the corn market, you rallied so much that you took out the previous rally high of 379 3/4, which ends the downtrend. Now you've got a market that's gone all in one day. You closed yesterday right by the lower Bollinger Band. Got that? You closed at 368 1/4, the Bollinger Band 67 1/2, and you hit 67 1/4. If you were to ask me, do I think you're going to the upper Bollinger Band right away? No. There's no report today or anything. Bang, you go right to the upper Bollinger Band, exceeded by about 3/8, and then come right smashing down again under the 18-day average. This is what can happen on a day where you get an event you never expected. Nobody knows if it's true. Everybody was trying to figure out, well, gee, he's speaking tonight. Maybe he's going to talk about renewable energies, and he's surprising the market with something that he's signing. And then the White House denied it, a formal denial, that they're not even talking about it, that him signing an executive order. I don't know what's going on. In the wheat market, the market rallied up to the 18-day average, failed to take out a previous high, and pulled back. Now, the problem is that you're oversold. So downside targets, nice, but in an oversold condition, I think the smart money just abandoned that market. We now get to the sugar, which is now plowing through the lower Bollinger Band and taking the market down. Big bad chart. Now it's widening out the pattern. Even if you rallied back up, this market is saying it wants to be bearish. So I'll stay in that camp until I see a reason not to be. In the coffee, it's a little bit different. You tried to push it out and you pop back into it. You're gradually taking it down, but unlike the sugar, which you're widening out, you're not doing that in the coffee. Are we trending? No. Just like the sugar, you got a higher high and a lower low, and you're oversold as you are in the sugar market. Hard markets to try to catch. Here's a market that I think I've been very adamant in telling everybody that gets my advice, I'm still in the bear camp. I think this washout here that rallied back to the 18-day average was just that, a washout after such a monster decline. But here you are again, right back down to the lows. You got a problem in this market, and it's a fundamental problem. The trend is down, the bias is down, and momentum is down. You're into the lower Bollinger Band, where first support against 1897 shouldn't be a surprise. Cotton market. Cotton's got lower highs, higher lows now. So you see this and that, the apexes? Now, if you take out 76.03, you rejoin the bear camp here, and maybe you can get to the lower Bollinger Band. If you take out that number, what you don't want to take out is 77.19. So let's assume that you're looking at the market fresh. Well, I'm in the bear camp because of lower highs that were first set up. But as a new trader looking at it, I go, I don't know that I like this setup. Lower highs and higher lows. Let's see which way it comes out. Should the market take out 77.19? I know it sounds crazy. You can turn all of a sudden into a market with higher lows and higher highs. Take out 76.03, you end up with lower highs and lower lows. In other words, we're at a key junction on this market. Cattle market, wow. Outside day up, right into the upper Bollinger Band and overbought. This market just churning away in here. You've gone from almost the lower band to the upper band, back to that line in the sand, and back to the 18-day average. A hard son of a gun market to figure out. Same in the feeder cattle. I have no idea in these meats what's going on. I almost feel like the meat market's been taken over by high-frequency traders, and they don't give a damn if fundamentals, anything else. It's just moving up and down in there, and that's what I think is going on. I'm calling this noise right now, sideways like that. Now, in the hog market, hogs have broken back into a downtrend. Admittedly, they're oversold at this point, but you got the lower highs, lower lows. Markets hit a downside target. If you take this out, the 6,900 level, you end that part of the downtrend. So there's a lot going on. We're going to find out more about soybean oil. I promise this isn't over. It's just a craziness that is going on. But one of the things to help you might be out of consensus. Now, imagine a source that you go to, and it's got newsletters from literally over 100 different contributors. I haven't counted the exact number, but I think I'm pretty close to accurate. Just look at all this. These are all the contributors that are putting information out. You get an idea of what they do, and then they take those newsletters, and on Tuesday, they issue their bullish consensus, which is famous as can be, and you get an idea overly bullish, overly bearish, what's going on. They are giving you a 4-week free trial. You'll get a user ID and a password to sign in and see all their online reports, what's going on, where you go with it. It's quite a publication. What do you do to get it? Well, you can give us a call, 866-973-2077. You can, of course, go to our website at www.iraepstein.com. You'll see a carousel of free offers on the beginning. You can click up here. You'll see an icon if you're watching me on YouTube. Or on a number of websites, you'll see right under us here, it says click here, and you'll get the form. And from that form, you can choose this, and away you go. I'm Ira Epstein. Take advantage of these free offerings. They're tools for your trading chest, and you have a great trading day.